Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the money gains played in the corporate world. Today we're diving deep into Dalrada Financial Corporation's latest filing, where the numbers tell quite the story about their financial health. You won't believe what we found in their balance sheet. And egg, before we dive in, make sure you hit that subscribe button and the notification bell so you don't miss our next deep dive. Also, join our growing community on Discord. Check the link in the description below. This is Dalrada Financial Corporation's quarterly report, giving us a snapshot of their financial situation as of March 31, 2025. Think of it as a checkup for the company, and boy did this checkup reveal some interesting things. Let's get straight to the heart of it, their financial statements. Right here we see the company's financial health at 2 points in time, March 2025 and June 2024. First up, cash. Dalrada had just under $100,000 in cash at the end of March 2025. Now compare that to over $500,000 just 9 months prior. That's a pretty big drop in readily available cash. And look at this accounts payable to related parties. It surged from just over $136,000 in June 2024 to over $9.5 million by March 2025. This is a huge jump and suggests the company owes a lot more money to its related entities. Overall assets went down from over $23 million to just under $21.8 million. This usually means the company either sold off some of its assets or its existing assets lost value. On the other side of the coin, liabilities went up dramatically from about $19.7 million to over $33.7 million. That's a massive increase in what the company owes. And this is where it gets really stark: stockholders' equity. In June 2024, they were in a positive equity position of over $3.4 million. By March 2025, that flipped to a deficit of over $11.8 million. Essentially, what the company owes is now much greater than what it owns. Now let's look at how the company performed in terms of making money and spending it over the 9 months leading up to March 2025. Dalrada's total revenues for the 9 months ending March 31, 2025 were about $13.7 million. That's a bit lower than the nearly $14.5 million they brought in during the same period in 2024. A slight decrease in overall sales. But here's the kicker: their cost of revenues went down even more significantly, from over $13.2 million in 2024 to just over $10.3 million in 2025. This did help them achieve a better gross profit. Their gross profit improved from about $1.3 million in 2024 to over $3.4 million in 2025. This basically means they are making more money from the direct sale of their products or services after accounting for the cost to produce them. However, their operating expenses, things like salaries, marketing, and rent, remain quite high. For the 9 months ending March 2025, these were over $18.1 million. This is a big chunk of money, and as you can see, it's more than their total revenues. This leads to a significant loss from operations. For the 9 months ending March 2025, they reported a loss of over $14.7 million. That's an improvement from the almost $18 million loss in the prior year's same period, but it's still a substantial loss. And when you add in interest expenses and other costs, the company ended up with a net loss of over $17.7 million for these 9 months. This really highlights the ongoing struggle to become profitable. This statement really breaks down how the company's equity changed over time. Looking at the accumulated deficit, it's grown from over $170 million in June 2024 to nearly $188.4 million by March 2025. This is the total of all the losses the company has accumulated year after year after year. And again, this shows that at the end of March 2025, the company has a substantial deficit in its stockholders' equity, meaning its liabilities far outweigh its assets. This is a critical metric for financial health, and it's not looking good for Dalrada right now. Let's look at where the cash came from and where it went. For the 9 months ending March 2025, Dalrada used over $6.1 million in cash for its day-to-day operations. This is more than the $5.6 million they used in the same period in 2024. This means they are burning through cash just to keep the business running. On the financing side, they brought in over $6.2 million in cash. This is mostly from borrowing money through various loans and notes payable. It's good they're getting cash, but it's important to remember this is borrowed money that will need to be paid back, often with interest. And overall, their cash balance decreased by about $400,000 during these 9 months. This is a direct result of using more cash in operations and investing activities than they brought in through financing, even with those loans. Dalrada operates in several main areas like Genetic for healthcare, Dalrada Climate Technology for energy solutions, Dalrada Precision Manufacturing for making parts, and Dalrada Technologies for digital services. They aim to be innovative and provide sustainable solutions. Now, this is a super important note. Dalrada itself states these financial statements were prepared assuming the company will continue to operate, but they admit to a negative working capital of over $15 million in March 2025, a negative cash flow from operations. This, they say, raises serious doubts about their ability to keep going. They're relying on getting more money from investors and growing their profitable businesses to stay afloat. That's a pretty direct warning sign. This section details how Dalrada applies accounting rules. It's pretty standard stuff, but it's worth noting how they handle things like revenue recognition and stock-based compensation. This is where they talk about buying other companies. In August 2024, they acquired Grand Entrances, a door and hardware store, for a small amount of cash plus a promise of future earnings. In May 2024, they also bought Ivy Services, a pharmacy business. These acquisitions are part of their strategy to grow and diversify, but they also add to the company's liabilities. This section really spells out the company's debt. They owe a significant amount to related parties and have various loans, including government loans like IDL and COVID-19 loans. The IDL loan is noted as being in technical default because of a change in ownership. This is concerning as it could lead to demands for immediate repayment. Here they detail how a lot of their debt with related parties has been converted into preferred stock. This is a common way to handle debt when a company is struggling to repay cash directly, but it dilutes existing shareholders. This note is critical, highlighting how Dalrada receives significant funding and has expenses paid by related parties. While common in some business structures, the line item of almost $9.6 million in accounts payable to related parties in March 2025 is substantial, it really shows how much the company relies on these related entities for financial support. This covers changes in their stock. We see a lot of common stock issued, often related to acquisitions, consulting agreements, or private placements. Many of these issuances are happening at very low prices per share, which can be dilutive to existing shareholders who bought in at higher prices. Dalrada uses stock and warrants to compensate employees, consultants, and board members. They've issued millions of these over the reporting periods. While this can incentivize people, it also dilutes ownership for existing shareholders and represents a significant cost. Here they break down performance by business division. Genetic, their healthcare division, saw a revenue decrease. Dalrada Climate Technology, boosted by construction projects, saw significant revenue growth. Dalrada Precision Manufacturing and Dalrada Technologies both reported lower revenues. The corporate segment, which likely covers administrative and overhead costs, shows a huge operating loss. This section covers lease agreements and legal matters. They have ongoing lease obligations for office and manufacturing spaces. More importantly, they've got several lawsuits on their hands. For example, Kroger filed lawsuits against GFX Specialty Pharmacy, though these were settled. There's also a case from Asset Group alleged to mask sales, which is heading to trial. Dalrada is also involved in legal disputes with former employees and consultants alleging fraud and contract breaches. These legal battles can be costly and distracting. But finally, they disclose that their disclosure controls and procedures were not effective. This means they acknowledge a weakness in their systems for ensuring that all necessary financial information is accurately reported on time. This, combined with the going concern warning, paints a concerning picture of internal financial reporting and oversight. So, my take on Dalrada Financial Corporation is this. The company is in a very tough spot. They're burning through cash, accumulating massive debt and losses, and their equity has turned negative, while they're making efforts to grow through acquisitions and get new financing. The scale of their financial challenges is significant. Their heavy reliance on related parties for funding and the fact that even their basic reporting controls are flagged as not effective are major red flags. The business segments themselves show mixed results, with some growth in climate tech offset by declines elsewhere. The ongoing legal issues also add to the uncertainty, and the ongoing legal issues also add to the uncertainty and potential financial drain. What's your take on Dalrada's financial situation? Do you see a path to recovery, or is this a sinking ship? Let me know your thoughts in the comments below. If you found this breakdown useful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description. Thanks for watching. See you next time.